20 quarters, 5 straight years without a single quarter of falling profit. That's the streak Abu Dhabi Commercial Bank just extended. And this quarter it delivered a record. But here's what the headline won't tell you. The number everyone's celebrating is partly a tax illusion. And once you strip that out, the real story is more interesting than the press release. Officially reported, second quarter net profit jumped over 30% year-on-year to a record, beating analyst estimates, while first half profit before tax rose to an all-time high. The bank grew loans faster than most peers and pushed non-performing loans to a record low. My read, genuinely strong quarter, but the growth rate on screen is flattered, and knowingly by how much is the whole game. Let me start with the asterisk because it reframes everything. That 34% half-year net profit jump isn't like for like. Fact, ADCB paid a 15% tax rate in the first half of last year but qualified for a 9% rate hike this year. A lower tax bill mechanically inflates net profit growth. My interpretation, the honest measure of the underlying business is profit before tax, up 28% in the half, 26% in the quarter. Still exceptional, just earned, not granted. Anchor on that number, not the headline. Second, what actually drove the profit jump? Read past the top line. Operating income rose just 6%. The real engine was impairments. Credit provisions fell by more than half year-on-year. Why it matters? Low provisions did more for the bottom line this quarter than revenue growth did. That's a legitimate result. It reflects genuinely pristine asset quality, but it's a lever that can't keep pulling profit higher at this pace forever. Third, the balance sheet is where the real repeatable strength lives. Loans grew double digits since year-end, faster than the sector. Deposits and total assets climbed, and critically, the bank got more efficient while growing. Cost to income improved, and the bad loan ratio hit a record low. My read, this is the sustainable half of the story. Volume growth is what offsets the one genuine weakness. And that weakness? Margins. Net interest income barely grew, up just 2%, because in a lower rate world, with fierce competition for deposits, the spread banks earn on lending is compressing. The margin ticked down in the quarter. For now, rapid loan growth is papering over it, but it's a one line moving the wrong way. Does management sound confident? Clearly. The CEO tied the result to a resilient UAE economy, pointed to a healthy pipeline across energy, transport and infrastructure, and said capital and liquidity can support more lending in the second half. This is the team pointing at the road ahead, not defending the past. My assessment, this quarter strengthens the long-term story, but the smart investor watches different numbers than the headline. The franchise is compounding, record profitability, record low bad loans, sector-beating loan growth. Before next quarter, watch three things. The net interest margin, can loan volume keep offsetting the squeeze? Impairments, because a falling provisions tailwind can repeat infidelity, and whether deposits keep pace with lending. The bottom line looks the same, but those three lines will tell you whether the engine underneath is still accelerating. Record quarter, tax flattered, headline, pristine credit. That's ADCB this time.